Welcome to the Hamsey Analytics Daily Market Commentary. I'm Paulo Navarro. Today is Wednesday, August 8, 2012. For the market internals, the New York Stock Exchange advanced decline differential closed at -1. Nasdaq advanced decline differential closed at -325. There was 21 new 52-week highs for the S&P 500 and no new 52-week lows for the S&P 500. Pretty neutral action here on the market internals. For the volatility, there were 227,000 contracts traded on the VIX today, with 26.5 million in total premiums paid. For the dollar-weighted put-call ratio in August, we saw a 0.83 reading, which is neutral, with 35% of the total premiums paid. For September, a 0.22 reading, which is a bearish reading, with 23% of the total premiums paid. And October, a 0.77 reading, which is neutral, with 29% of the total premiums paid. Here we have the daily chart for SPX. Lots of important things happening today. We were able to confirm the close above this trend line, which is important here, and we are staying between the +1 and +2 sigma channel, which is constructive for the market to go higher. As an upper target on the 3 sigma, we're still looking for 1429. Remember, that is not going to be an overnight target. That's a longer term range. That is the 3 sigma on SPX. On the downside target, we're looking for 1369, which is 0.6 here. We would like to come back, maybe test that and bounce even back higher. That would be good also for the market. CI now turned red here. This is a warning sign. But still, we want to look at the slope of CI, which is still positive and going higher, which is good for the market overall. CI continues also to be pointing higher, which is good. And sigma channel width is going higher, expanding as the market goes higher. Now we're gonna look at the 60-minute chart to get some targets, more shorter term range, and see how support, pivot, and resistance are acting. You can see here we're touching resistance number 1 here, this red line at 1405. We've touched it several times. We have not been able to break it and confirm the break up there. After we break that level, we're looking for 1419. On the downside, the pivot for the weekly, we're looking at 1379. But again, as you can see here, we're touching lots of time that resistance. Maybe we're getting closer to a break to the upside. For SPY daily chart, we could see here we are in right now. Since almost from here, we could see that we are on this +1, +2 sigma channel, which is going higher. The market should follow if we do not break that. This one was one exception we had here, but you could quickly see how it bounced back again to the channel, going higher. Targets on SPY, it's 142 and then 143.14. On the downside, we're looking for 137, the pivot. That's going to be the 0.6 line on the daily chart. Now going to the 60-minute chart to see the shorter term targets. We could see here we're looking for 140.70 and then we're looking for 142.25. A break of that 140.70, 140.80 level would take us to the next target, which would be 142.25. That would be a great week here if we are able to get here to this target. But if not, we could go and watch this 138.20 level. So those are 2 important levels here to watch, breaking the 140.70, 140.80, maybe going to the 142.25. If we're not able to do that, maybe we could come and test the 138.20 level. Here we have the IWM. This is the Russell ETF, important, which shows the risk on, risk off appetite for the market. As we talked about last week, this showed that we were lagging here, not much risk on coming on, but we had a triangle that you could see here on the trend line, and we wanted to see we're making lower highs and higher lows. It is compressing the triangle. We're almost at the target on the upside. 171 would be around that target. We want to break that to the upside, maybe come even higher, and then come back and test it. And after that, we come back and make it even come and test the 74 level or the high for the year. This chart's very important here. We do want to see a break to the upside to get some risk-on appetite in the market. As the S&P rallies with the Nasdaq, we want this chart to follow with them and maybe even catch up the lagging that it had the last following weeks or days. Last chart we're watching here, again SPX daily chart, but we're watching that a longer term. I just want to point out here, and I'm gonna zoom in here later, that this rally that we had here after the May and April sell-off has not been an easy ride up. Gone up here, touch positive 2 sigma, then sold off. Up here, positive 2 sigma, sold off. Up here, positive 2 sigma, sold off. Up here, positive 2 sold off, and now we're up here at positive 2 sigma. So here we are at critical levels on the market. We have gone higher, touched the 1400, but for the last 4 times that we touched 2 sigma, we have sold off somewhat and even come back higher. So I'm not saying the market has reached the top, but this is a point to be careful here, even starting longs or maybe taking some profits off the table. We're gonna zoom in this part of the chart to see what I meant here. Here you see, this is the 2 sigmas I'm talking about. We touched it here, 2 sigma, and sold off. 2 sigma, sold off. 2 sigma, sold off. 2 sigma, sold off, and now we're at the 2 sigma. Very important level here. Again, as we either want to break that 2 sigma to the upside, or we're going to probably come back, test some lows here, maybe the 1380, 1370 level, and maybe then come up again. So here we need to be very careful, very fast acting on the market. We have a special offer by TradeStation. Get your Hamsi Analytic proprietary indicators paid by TradeStation. Contact Active Traders office in Chicago, Peter Albino, at the number listed below. Have a great night, and I'll talk to you tomorrow.